Hi everybody, Phil Strong here again and welcome back for another video blog. I'm really glad that you joined me today. Today I want to talk about a concept called a home equity loan, or it's sometimes called a line of credit, a revolving credit. This is a floating loan account that you can use to really accelerate your mortgage repayments, your debt repayments. But I've got 5 key points that I'd like to share with you today, hopefully to help you to understand what a home equity loan is. First point is, what is it? Alright, the easiest way for me to describe this is to help you develop a picture in your mind of how a home equity loan works. So the way that I describe this to my clients is, you imagine it's like a bucket. Imagine that your home equity loan is like a bucket and the limit of your loan is the top of the bucket. Now what happens is, when you put your income in, this is a key principle, you use your income to offset your debt, your mortgage. Now that sounds dangerous, but look, I'll talk about that in a second. So what happens with a home equity loan is your income goes into the bucket and it lowers the level down to here. And what that means is you owe less money on your mortgage. And the key principle of that is that you pay less interest that month. Now that might sound so what, but the reality is, if you do that on a monthly basis and you find different ways where you can accelerate your mortgage repayment so that you're paying less interest, the key principle is that you pay less interest every month. That month turns into more interest savings the next month, so it compounds your interest savings, which means that over the duration of a mortgage, what typically might be a 25-year mortgage, I've used this to help my clients get their mortgage down to 6, 7, 8, 10, 12 years. So the compound interest is a phenomenal principle once you get your head around understanding it. The second question I have today is, well, are they dangerous? And the answer to that is absolutely. Absolutely. You see, if you imagine the bucket having a limit, a top, and that's the amount that you owe, the problem that many people face because they don't understand the principles is that they put their money in and then they draw right back up to the limit. And that limit stays at what their original loan balance was. And that means 5 years later, if they keep putting money in, taking it out and going back to the limit, that in 5 years they'll owe what they owed 5 years ago. And this is how many people end up with a 50-year mortgage. And we don't want that to be you. So are they dangerous? Absolutely correct. And I'll help you with that in a minute. Third question, what is the number one principle to take advantage of a home equity loan? And it's just this. The principle that you need to understand is that the interest that you pay the bank is charged on your average daily balance. So what they do is, you imagine 30 days lined up in a row for a 30-day month, and they take the balance of every single day and then they average it out, and that's what they charge you interest on. Some banks will do it a different way. They'll charge you a daily interest amount, but the reality is it works out just the same. Now this is the key thing that you need to understand, because what I teach my clients to do is to use these so that they get the balance of their loan down as much as they can and keep it there for as long as they can. Because your average balance is lower, you are therefore able to pay much less interest at the end of the month. And then you obviously use your money as you need to, but you do the same thing the next month. So the number one principle is to keep your average daily balance out for as long as you can during the month, and to do that every month, and to do it in a disciplined way. The fourth question that I have here is, do you need to refinance to do this? This is a bit of a tricky question because it does depend where you live in the world. In some countries, banks don't offer it, or some banks don't offer it, and only certain banks do. So if you wanted to take advantage of this, you would need to refinance your whole mortgage across to that bank. And obviously you need to be careful about doing that, because there are certain costs and risks involved in doing that. But it's quite common these days for you to be able to keep your mortgage in one place and then take out a home equity loan with a specialist provider for a part of your mortgage. So let's just use a round number and say $50,000. You would take out a new loan for $50,000 with a specialist provider, and then you'd use that $50,000 to reduce your main mortgage so it's smaller. And then all I teach my clients to do is focus on paying that one off as fast as they can. And you can use those principles that I've talked about with your average daily balance to keep the balance down and to pay it off much faster. So do you have to refinance? No, not always. But sometimes yes. That may not help you, but look, I encourage you, now that you know what a home equity loan is, you can start to go and research in your area, and hopefully that I might be able to help you with that as well as we travel along. The The last point, the final point that I have is key. Look, I just want to encourage you to look into this as much as you can. I'll help you if I can, but do not take this on without learning the tips and tricks and strategies that are absolutely necessary to take full advantage of this. Because if you don't, unfortunately, it could work against you, and you imagine the bucket, you'll stay at that limit, and that is not something that I want for you. I do not want you paying maximum interest every month to the bank for the next 50 years. That's totally not why I'm here. What I want you to do is to be able to learn the tips and tricks and techniques that you need to do to be able to take advantage of this principle and smash your mortgage in half if you can. What a fantastic concept. Imagine instead of having 25 years left to go, you've only got 12 or 10 even. That's the reality of what you can achieve. But you must be educated to use it well. You know, it's like people say guns are dangerous, and I'm not pro guns or anti guns, but my point is this: a gun is something that's very, very powerful, but it needs to be in the right hands. And a home equity loan is the same thing. It's a very, very powerful tool, but you need to have the education and the support to help you to do that. And unfortunately, I'm going to apologise for being rude, but most banks, they don't do it. They get you in there and they say, see you later. And they don't have you do it. So that's my motivation for educating people, is to help them to understand how they can use this one strategy to totally smash their mortgage. And of course, as you know, if you've seen my website, I've actually got 5 strategies that I teach people so that they can smash their mortgage in, and this is just a part of one of them. So I hope that's helped you today. Thank you very much for joining me. If you have any questions, you can get hold of me via howtosmashyourmortgage.com, and I hope you have a fantastic day. Thank you very much for joining me.